Green Rush, Mining the Energy Revolution with Matt Watson.
Hello, welcome to Green Rush, Mining the Energy Revolution. I'm your host, Matt Watson. Each week we dive into the periodic table and take on another couple of elements and talk about these elements in the context of the clean energy transition. This week I'm thrilled. We've got a great guest from AP Ventures. The topic title today is Plotting a Path to a Productive Hydrogen Economy. And our guest is Mr. Andrew Hinkly. He's a managing director of AP Ventures. Andrew, welcome to the program.
Hi, Matt. Thanks very much for having me. It's a pleasure to be here.
Fantastic. I went to your website. I think you've got one of the best headshots of any executive I've interviewed. So good job on that. But I was a little bit floored. You're also not only a manager of these groups that we're going to talk about, some 29 group companies that AP Ventures is helping to facilitate, but you're also a board member of some 6 of these, including Emoji, Grey Rock, and a number of others. So that's fantastic. You truly have skin in the game on this, I would say, right? Wouldn't you agree?
Oh, yeah, absolutely. And that's part of the joy of being in my role and leading AP Ventures. It's having skin in the game, skin in an important part of the game. In my view, we transition from an old energy system to a new one. So it's been an exciting 6 years, I think, in July that we originally founded AP Ventures, and it's been a great journey so far.
And some 30 plus years, so that says, I'm in the same boat. That says something about both you and I. We're both old.
Yeah, I wish we had what bit in.
But you're also, you spent a decade at Anglo, so that's interesting. So you've got the mining perspective. You're clearly a PGM guy at heart, and that obviously plays a key role in this function that you're playing here with AP Ventures. So,
yeah, that's right. I had a very enjoyable, hopefully productive 10 years at Anglo American. A large part of that, as you rightly say, was being responsible for the precious metals part of that business, both the sales and trading as well as business development. And it was from that origin that AP Ventures was launched. But prior to Anglo American and mining, I was in the automotive industry for close to 20 years, largely based in Detroit, where I was also at various times exposed to the other side, if you will, the demand side, the traditional demand side of precious metals in the auto catalysis sector.
Outstanding. So why don't you tell us a little bit? I grabbed a screenshot of your AP Ventures website. Why don't you lay out for the listeners what AP Ventures is all about?
So we're a venture capital fund focused on principally low carbon molecules, hydrogen specifically, as part of the energy transition. That's where we have focused since 2012. And we have been investing along the hydrogen value chain, looking for interesting new technologies that enable the transition to low carbon gases and chemicals. So I describe it as gas and chemicals because in our most recent fund, we now have 3 funds. We've extended our mandate to include carbon capture and utilization, largely because we see the opportunity for the combination of recycled carbon and low carbon hydrogen to displace traditional hydrocarbons. So that was the sort of extension of the mandate. The common theme across much of the technologies that we are investing in is that they all have as a critical enabler precious metals, either in an electrochemical setting or in a catalysis setting. So most of our companies have at their core a precious metal demand element. Or alternatively, if it's not a direct use of a precious metal, the companies we're investing in are enabling other parts of that value chain that utilizes precious metals.
And that's interesting, this extension that you're talking about with the carbon capture. Of course, the carbon can be used productively in e-fuels or sustainable aviation fuels. So turning it around and using it productively for clean energy uses, coupled with hydrogen, is clearly one of the paths forward that we're going to talk about. Let's. I actually have one of your slides between you and Mitsubishi Corporation, Jonathan Butler. You guys have put together a slide like this that you talk about. Basically, the PGMs and the hydrogen economy are basically synonymous, right? There's clearly a home, and when you look at it from a volumetric perspective, for quite a bit of platinum, for a large piece of the iridium pie, for ruthenium, and for even a small amount of palladium. Although I think the palladium, in the context of the total palladium available, is rather small. I tend to emphasize the big three: platinum, iridium, and ruthenium. But whether we're talking PEM electrolysis, even conventional alkaline electrolysis, I've got a number of clients in this space. There's platinum and ruthenium that's slipping into that space more and more. Seawater electrolysis, direct air capture, midstream processes, including, of course, synthetic ammonia. Ruthenium is used both in the fabrication, in the Haber-Bosch process, as well as in cracking ammonia. So we're going to talk about that later. And on. Methanols, you'll see some palladium show up there and some ruthenium. But we see basically these same PGMs used throughout this space. So just to make sure our listeners are in tune with that, that's, the hydrogen economy and these PGMs are so interrelated. Any other comments you'd like to make there, Andrew?
Matt, you have covered that extremely well. I'm glad this is on tape because I think I might use that myself. But it's a great slide. Thank you, Jonathan, for putting that together. The only additional point I would make, because many of the ones that you called out, I would imagine are broadly known to many of the viewers. But the one which may be less known, but a huge potential user of a couple of the metals is liquid organic hydrogen carriers. And you see that in the middle of the chart in distribution and storage, just above the yellow dashed box there. So liquid organic hydrogen carriers are, as it points out, big users of platinum palladium. And that, in my mind, is a huge opportunity for demand growth within the hydrogen industry for those particular precious metals.
And the way I like to convey that to the listeners, I think, when I'm giving keynotes or speaking, is, the hydrogen density is a problem. Transporting gas and distributing it with a kind of a conventional tanker, like a gasoline tanker, is very inefficient and very costly. It takes loads and loads of shipments to meet the equivalent of what you would do with a gasoline. And so compressing it and making it a denser form is so important in reducing transportation costs. And unfortunately, transportation costs are a huge part of the cost pie with hydrogen in the final distribution points. And so overcoming that through liquid hydrogen carriers, or I would say even ammonia. I tell my listeners a lot of times that I think by the time we get there, we're going to stop calling it the hydrogen economy. I think it's going to become more the ammonia economy than anything. I think ammonia as a denser form than hydrogen is a much more effective transportation means.
I think you're pointing out that, Matt, that what you're saying is absolutely true in terms of the efficiency of transportation of hydrogen. Now, we are invested in both ammonia companies as well as liquid organic hydrogen carrier company. So we see horses for courses. I was emphasizing liquid organic hydrogen carriers from the strategic perspective of the demand creation they have for the PGM industry. I would emphasize also the difference, between ammonia and liquid organic hydrogen carriers are, there are protocols for handling ammonia which have been in place for many years. I would say are largely safe, but it is a very toxic liquid. And in some locations, some jurisdictions, there are restrictions on where it can be transported through cities, for example. And accordingly, the major differentiator, if you will, of liquid organic hydrogen carriers is how benign they are. And if you have a situation where you not only want to do an intercontinental transportation of hydrogen, but then continue to transport it in smaller lots, smaller loads to almost a retail environment, then liquid organic hydrogen carriers, because of their benign nature, have a significant, I would say, contextual or societal benefit in terms of the both actual and perceived risk profile. And it's when you get into those smaller lots, retail environment, that liquid organic hydrogen carriers suddenly become a lot more attractive versus other ways of transporting and storing hydrogen. So horses for courses. I don't have a favorite child, if you will, because I'm not entirely vested in the PGM industry. If I were, which perhaps many of your viewers are, I would be a major supporter and leaning into liquid organic hydrogen carriers versus ammonia, frankly.
Now we're going to get to these group companies, but just to set everybody up here, on your website, you break this down into 4 major categories of energy, shipping, steel and chemicals, and aviation. That's kind of major blocks that these group companies could go under. Unfortunately, I think in some of these, there's some crossover. Some can hit a couple buckets. But just to flash at everybody, again, going to your website, here are these 29 venture capital entities which you're partnered with, and quite a collection of logos here. Quite a collection. This has grown substantially over the years. Am I correct?
It has. As I mentioned, the logic, you can look at it from a couple of different perspectives on, why are we targeting certain companies? Firstly, we're looking for differentiated technologies that can unlock the value chain. So we are looking along the value chain at technologies that unleash opportunity, not only in its direct application, but hopefully also elsewhere in the value chain. So, for example, you have energy up front in the value chain, if you will, think about it from left to right. So hydrogen production. You have a midstream, that's the storage and transportation of hydrogen, and the downstream application. So it's technologies within those 3 broad areas. But then you can look at it from a sector perspective. So we had energy, we have transportation, we have aviation, I think, and chemicals in your prior slide. So what that is depicting is, where are low carbon chemicals, where's hydrogen going to find a home where it's welcome. In other words, where there is significant demand for a low carbon alternative. So what we're looking for is hard to abate sectors where low carbon electrons are not going to be applicable, most applicable. So that can be on the application side, it might be in sustainable aviation fuels, for example, where we've investments. It may be, on the energy side, where we're looking at simply what is the lowest cost, low carbon hydrogen molecule that can be produced both now and in the future. And there we have a number of technologies. They're not all in absolute zero carbon hydrogen production technologies. Some of them are low carbon or carbon capture. So we do have electrolysis, that's zero carbon hydrogen, but we also have methane pyrolysis and some carbon capture hydrogen production associated technologies as well. So examples of the electrolysis, some of your viewers may be familiar with, would be in Norway, HyStar, which is PEM electrolyzer. For those interested in precious metals, that's iridium platinum mix. On the methane pyrolysis, we have a company in Australia called Hazer. And then on the blue hydrogen production, we have a company again in Norway, Zeg Power. So that's the upstream area of production. Then the midstream, we've spoken about LOHC and ammonia. Companies represented there are Hydrogenious out of Germany on the LOHC side. And then on the ammonia side, the example is Amogy. So Amogy has a ammonia cracking technology, and its primary application is likely to be in the maritime sector. So a hard-to-abate sector where potentially the combination of hydrogen with a fuel cell or hydrogen as a pre-combustion gas for the combustion of ammonia in more traditional internal combustion engine setting. It's the application that provides the single fuel opportunity for those applications in the maritime sector. So, and then further downstream, I mentioned sustainable aviation fuels. We have Infinium representing that, and there's a number of other companies that we've collected over the years. But their general common theme is through the value chain. Where is there a technology that's highly differentiated that unlocks an opportunity across the value chain? And that's how we've developed the portfolio. We're delighted with the ones we have today. We continue to see numerous opportunities. We see approximately 6 incoming opportunities every week, and we invest in 3 to 4 per year. So a huge number of opportunities. We're selective, clearly, on those that we're investing in. It's not a binary decision-making process that we're involved in. We do try and provide feedback to every opportunity that we see. So, and then those that we're clearly saying no to, that's one category. But there's a whole group in the middle where we pride ourselves on nurturing companies that aren't perhaps quite ready, but we feel they have something that will be of interest in the future as well. And some of our most favored investments, I guess, have been those that have gone through that long gestation period of nurturing before we finally decided to make an investment. And the benefit for that, for us, and I hope for the team that we are working with within the target company, is that we get to know one another. We get to understand how we work together and develop a relationship that will be long lasting. So that kind of gives you an idea of how we developed this portfolio, the numerous number of companies, as you point out. There's a logic to the ones we've chosen. It does go through a very rigorous sifting process, and they are competing with numerous peers, if you will, over the course of our selection process.
Wow, that was a fantastic overview. And now I understand from your website 2 have been realized or now commercialized, if you will.
Well, these ones that we've sold. So from a realization perspective, we sold United Hydrogen, which was a company based in Tennessee in the United States that was beginning to develop a liquid hydrogen production plant based on byproduct hydrogen coming from a chloralkali site. And we got involved quite some years ago now. We're delighted to do so and use the opportunity not only to help them develop their project, and this is where the technology comes in. We, as part of our investment, encouraged them to distribute the liquid organic hydrogen carrier technology alongside their liquid hydrogen. So they had a broader portfolio of technologies for which to use to distribute the byproduct hydrogen that they had access to. So that was the link to the sort of technology side of that. And then, gosh, it's probably 3 years ago now, we sold that investment to another company, Plug Power, which is also in our portfolio. It's in our portfolio because as part of that transaction, it was a cash and share swap deal that we did and retained for a period of time some Plug Power shares as well. But we're delighted with that investment, and both for strategically and financially. And then Hyatt Hydrogen was the other one you highlighted. That was in Europe, in the Netherlands. It was a company involved in hydrogen compression. The uniqueness was it's electrochemical hydrogen compression using, if I recall, platinum as a catalyst within that. And we sold our interest there to a strategic investor, Fortescue Mining.
Well, I want to recognize our program sponsor. So before we dive back into the content, let's take a moment to thank our sponsor, Revival Gold. Stick around for the next 30 seconds to hear what Revival Gold is all about.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million-ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Thanks for sticking with us. Really appreciate our sponsors supporting the channel to bring you this great content. So now let's get back into this content. And so Andrew, so I took your categories here, and I did the best for me, and I hope you don't mind trying to organize these. And you have an awful lot of these 29 group companies are I think in this energy space. And so I kind of did some subgroupings where, some are related to hydrogen proton exchange membranes. Some are dealing with energy density or storage density, some with a focus on methane, some with a focus on transportation and distribution, and then one on the blue hydrogen. There is shipping categories, steel and mostly chemicals and aviation. And I had a kind of another kind of other carbon emission reduction technologies. And so we don't have time to go through each of the 29, obviously, but I wanted to try to pick one on each of these pages here. So here's 4 key ones I think that are relative to PEMs. Plug Power we've been talking about. Plug, for anybody who doesn't know, very interesting group. They're responsible for bringing PEM fuel cells to forklifts more than anything, lift systems and forklifts. So in warehouses that have larger fleets of lift devices like forklifts, if you got 20 or 30 of these types of lifts or more, like an Amazon, like a Walmart, you see a lot of these larger warehouses have already converted to PEM hydrogen fuel cells. Plug is responsible. The last numbers I saw were somewhere between 350 to 400,000 forklifts worldwide, mostly in North America. But just a huge presence that's been around for a couple of decades now, and then more recently have gotten into hydrogen fueling station systems as well. So yeah, very interesting group. But Andrew, my concern, I know when I look at Plug or I look at Ballard or I look at the one in the UK whose name escapes me at the moment, some of the PEM the membrane guys, they're financially still underwater. They're still burning cash, right? Getting them to a profitable state seems to be the challenge for a number of these sorts of groups. And I know the Plug team, there was a change in leadership just recently. They got a new CEO, I think from Amazon, an Amazon executive that's moved over. So I'm pulling for Plug. When I worked for Tanaka, we were a major supplier of catalyst materials to these guys. So I really want to see them do well, but I continue to worry a little bit about the profitability in this space. Any comments there?
Yeah, look, it's a capital-intensive manufacturing process to produce electrolyzers. And, I mentioned in the introduction, I came from the automotive industry where, doing in a single plant 400 vehicles in a day was not unusual. These guys are operating at volumes which are, at best, 400 units in a quarter. And those are the more developed PEM electrolyzer companies presently. I recently did a on-site launch readiness review for one of our companies, Highstar, which we had on the prior page. And, the volumes they're talking about are very small at this stage. And that is part of the issue. But it's not only at the OEM, if you will, it's in their supply base as well. So the opportunity to scale up is huge. It's like going from a prototype part to a serial production part and the cost reductions associated with that change in volume are significant. So there's an opportunity to become much lower cost, increase volumes, and be more profitable. But there has to be a demand pool for the hydrogen for that to happen. And that's why when we think about the investments we're making, we're thinking about it from a value chain perspective. Where we see near-term demand, which these companies and the ones we're invested in and others that they are competing with, where they will see a significant pull will be in my view, sustainable aviation fuels, where there is significant demand in e-fuels specifically for low carbon hydrogen, which is temporal matched, which means that the specific characteristics of a PEM electrolyzer that can react to changes in the power supply from a variable renewable source are highly valued. And accordingly, that sector alone will be a high driver of demand for PEM electrolyzers. And accordingly, the cost of those electrolyzers will come down. And with that, the companies will become cash flow positive and profitable over time. So, that's our expectation. And we'll see that realized over the next couple of years for the most successful of these. And there will be a shakeout as well, Matt.
Oh, sure. Absolutely.
In any nascent industry, there will be winners and losers. And those with the best product design, both commercial proposition, will succeed.
That's right. You can't expect to have 29 out of 29. The industry will shake itself out for sure. The next grouping here, I have, kind of energy density or storage density type related groups. I was hoping you could comment on this immaterial group. This one is very intriguing to me with what's known as monolithic metal organic frameworks, or MMOFs. Very interesting technology that's being developed here.
Yeah, both in early applications for carbon capture, as well as potentially hydrogen storage as well. But it acts essentially as a sponge and allows sort of densification of a gas through that process. What immaterial does is both has a very sophisticated way in terms of characterizing the material, that the MOF, as it's described in the first instance, but then the second piece of what they have, and perhaps the most unique, is the ability to manufacture those MOFs in a way that they are durable and can be utilized in a very effective way, also in a process. So exciting company, young, a spin out from Cambridge University in the United Kingdom, attracted a lot of attention from the oil and gas industry. We're invested alongside some of the major players in the oil and gas service industry, such as SLB. The other one I would point out on this page, because it speaks to the technology innovation that we're interested in, is Noble Gas. They're a company based in the United States, just outside of Detroit, and they are making storage tanks, but storage tanks that perhaps like you've never seen before. As they used to say, it's not your father's Chevy. These Noble Gas tanks are actually tubes that are designed to be conformable. So they address the packaging constraints for compressed gas in certain applications. So you can think of mobility applications where packaging may be constrained. But it's not just the fact that they are conformable. Most high-pressure tanks require huge amounts of carbon fiber to contain hydrogen at very high pressures, 350 or 700 bar. What Noble Gas are doing is completely eliminating the need for carbon fiber. So they use a different type of fiber, but very limited amounts of resin, which makes it infinitely more recyclable than a carbon fiber-based tank. Furthermore, because of the nature, the thin tube nature rather than a large vessel, which is the traditional way of designing a high pressure tank for storing hydrogen, rather than a vessel, these tubes have a different way, should there be a failure, of performing. So they have a far lower burst sort of configuration, if you will. So they kind of rip apart in a more gradual manner rather than exploding if there should be a failure, which adds significantly, obviously, to the safety value associated with this design. So very excited about the company. Huge capability in terms of rapid prototyping, and the capital cost associated with manufacturing these tanks is an absolute fraction of the traditional way of producing a pressure vessel for hydrogen. So really excited about that company, and delighted to see it coming out of Michigan. Frankly, I spent a lot of my career there, a lot of people, and got huge respect for the capability that the automotive industry produces. So delighted to see that coming to the surface.
Fantastic. Let's move on. Next block, the groups associated with methane. You got Gray Rock, the hazard group that you mentioned earlier, and C0. Any one of these you want to highlight?
Well, Hazer Group is within the methane pyrolysis cluster. Not only those that we're invested in, but globally is probably one of the most advanced methane pyrolysis companies out there. Methane pyrolysis has a particular application for both production of hydrogen, but also the byproduct, which is a graphene, is a very interesting and potentially valuable resource as well. So they've made tremendous progress since we've invested in them. They have a significant demonstration plant just outside of Perth now running. So very interested in that company. Probably is, from a geographic perspective, probably has early adoption and application in the Asia Pacific area because of constraints around renewable energy, but also has a very interesting integration opportunity in the steel industry. So for decarbonizing steel production, again, an alternative technology pathway, which is probably applicable in certain geographies more than others. So where, for example, in Southeast Asia, large steel producing plants that can bolt on and this type of technology from Hazer, it feels like a very natural fit relative to water electrolysis, for example, simply because of the resources that are available in that particular region. So, yeah, excited about Hazer.
Let's move on here. So another grouping of companies with focus on transportation and distribution of hydrogen. Any group here you'd like to highlight?
Well, we've spoken a little bit about Hydrogenius and United Hydrogen. HRS is an interesting company based in France and involved in refueling station development. So we've seen tremendous growth in this business over the course of the last 3 years since we've been invested. It's an interesting business, continues to find great traction. Certainly a distribution avenue for some of our technologies that we have elsewhere in the portfolio. So looking forward to continuing to work closely with HRS.
Yeah, we'll keep moving along here. So one group that we talked about briefly was a blue hydrogen group. Blue hydrogen being, conventional steam reformation generated hydrogen, or what they would characterize as a gray or dirty hydrogen, where you use carbon capture, potentially, exceeding 95% carbon capture. Not a perfectly green process, but close, a blue hydrogen process. So ZEG is your player here. Why don't you tell us a little bit more about ZEG?
ZEG similarly has a commercial demonstration project now running in Norway, which is an ideal location for the company because of some of the infrastructure associated with carbon utilization, as well as the hydrogen. Perhaps the most interesting thing, though, strategically for us, is about, again, that value chain view of our investment portfolio. So our thesis is that there are certain technologies that are going to be more cost competitive sooner than others. And blue hydrogen production, I would suggest, is most competitive from a cost of hydrogen today.
Exactly.
relative
Exactly. I couldn't agree. I couldn't agree more. Absolutely.
to water electrolysis. And accordingly, we'll have a role to play in substantially reducing the cost of hydrogen, reducing the carbon intensity of hydrogen in the near term. So really important role to play in instigating many of the downstream applications for hydrogen sooner than they would otherwise be adopted or instigated if we relied purely on water electrolysis technology. So an important suite of technologies and technology providers. ZEG is our specific investment in the blue hydrogen sector.
Very well said. And the way I tend to present it is, unfortunately, green hydrogen right now is about 3 times the cost of fossil fuels. Blue hydrogen, let's say you can get a 95% carbon capture and even take advantage and commercialize the use of that carbon in some of these sustainable aviation fuels. Very, very, I think, high potential to reduce the cost early. And I have a slide here I slipped in that, there's 7 U.S. hydrogen hubs that the Biden administration was kicking off funding for in the IRA. 4 of these are going to be blue hydrogen, which I think is outstanding. Again, with early adoption and getting the cost down early, I hope to see these become very productive players in the hydrogen production world. Let's move on just real quickly. Shipping. We've already talked about this a bit, but there's a discussion about the bunker fuels that drive a lot of the larger vessels is some of the dirtiest fuels in the fossil fuel realm. I mean, even dirtier than coal in many cases. So a lot of people are looking at using ammonia as a feedstock or a fuel source, if you will, to drive large shipping. It's not just a conversation. They are actually building some of the lead ships that will use ammonia. And so there's, I think, a big hope here that an ammonia market today, let me look at my notes, some 150 million tons of ammonia is produced today. Largely that's used in synthetic fertilizers. But if we can grow it for use in the maritime sector, there's some outlooks that this can grow to 900 million tons of ammonia a year. That's some 4 to 6x growth in today's ammonia market just to support the shipping sector. So, yeah, huge opportunities. And I think there's some very specific and targeted developments going on here. And so you got 2 players, Emoji, who I've had a chance to invite them into the IPMI. They spoke just recently in Orlando at the IPMI event. And then the Starfire Energy. Any comments here that you want to bring up?
Well, I just want to point out to any of your viewers, if they're in New York for Climate Week, Sustainability Week, I think it's the 25th or something of September, then do look out for the Emoji tugboat. So it's full-size tugboat that will be plying its trade around the harbour there. So that'll be the first vessel of that size powered by ammonia, specifically ammonia that is being cracked and fed through Ballard fuel cells. So that's the one technology pathway. There are others for using ammonia in shipping as well. But do look out for that. A great company, made huge progress over the last 3 years or so. It is one that AP Ventures seeded originally. There was no company at all until we got involved, and I'm delighted now that it employs, I think, over 200 people with offices in New York, Norway, Singapore, and a manufacturing facility in Houston, Texas. So delighted with the progress that the team have made. Great sector of opportunity, as you described, Matt, and look forward to seeing them continue to grow over the next few years.
then going on to steel and chemicals, you could group these companies a number of different ways, like I said. So you could put the ammonia groups there, and you've got a couple of others here as well. Can you tell me a little bit about this HP Now?
Yeah, slightly tangential to what we were describing, but it certainly fits from a precious metal utilization perspective. So they produce hydrogen peroxide rather than hydrogen. It's used principally for water treatment. So renewable power coming in, splitting water, but into hydrogen peroxide used for off-grid sort of water treatment opportunities, as well as irrigation farms, etc. Original technology developed in Denmark. We're involved in a direct investment in that company, but we also established another company associated with HP Now in South Africa. And the company in South Africa is there to develop the technology for that specific market, which has been a really interesting and productive engagement for us. So we seeded the company in South Africa, and it has found, I'm pleased to say, traction in those applications I described, specifically in one mine site as well, where the potable water was substandard. And the HP Now technology has been applied. And the nice thing about that is the circularity of it. The core mineral, if you will, within the technology is platinum and iridium. And the water now that's being supplied from the technology is being supplied to a PGM mining company. So delighted with that circularity, eliminated thousands of plastic bottles from the mine site. Not only is that great for the environment, it's great for productivity because they were getting stuck in conveyor belts. So it's a really great story.
All right. And we'll quickly move on here. This one we talked about in my last interview with Johnson Matthey, with Marjorie Ryan. This aviation sector, the beauty of some of these sustainable aviation fuels and e-fuels is you can drop them into existing infrastructure. Planes could run on them without any really significant retrofit. So there's a number of groups you've got listed here. The sustainable aviation fuels, though, it's not just gee, I hope. This is something that is becoming commercialized very quickly. I saw just last week, United Airlines is going to convert a very large Chicago O'Hare hub of theirs to run on SAF fuels by this summer. So this isn't just pie in the sky. This is happening now. Any group you want to highlight here?
Well, probably just to point out that there's two different areas that we are exposed to aviation in the portfolio. The first one is the sustainable aviation fuels, and that's represented here by Ether Fuels and Infinium. And then the other sector is Zero Avia, and that's using pure hydrogen, feeding it through a fuel cell to power an aircraft. They are, as you said, drop-in fuels on the e-fuel side. And when we talk about sustainable aviation fuels, what we're specifically interested in is e-fuels or sustainable aviation fuels of a non-biological origin. So these are ones that combine hydrogen with captured, recycled CO2 to produce a fuel. They're not relying on waste fats, etc., which is an alternative route to produce sustainable aviation fuels. Within the two, the most advanced in our portfolio is Infinium. They have a plant running in Corpus Christi presently. So they're producing fuels for the Amazon fleet of not aviation presently, but it's a diesel product, as well as a naphtha byproduct, which is being used by a company for running shoes. So they're two sorts of offtake. So that's that company now has a second plant that they are kicking off also in Texas, a much 10 times the size, that will be, I think, first fuels in 2027. Delighted with the progress, delighted with the other investors that have come into that business with us, including one of the Bill Gates's funds, who've made a huge commitment to the sector and specifically to Infinium. So very pleased with that. Zero Avia, on the other hand, has a new powertrain. So the combination of hydrogen with a fuel cell to create a new powertrain, competing against gas turbine engines of a particular size to begin with. So the PT6, for those familiar with Pratt & Whitney's lineup, is perhaps one of the first sectors where they're the most competitive against.
Finally, the last one we're going to cover here, a whole bunch of different groups. One that's fascinating to me that I think has a huge chance of commercial success is some of these technologies, I think using palladium, and correct me if I'm wrong, but groups like It's Fresh, food inflation has touched us all, right? We all are paying double the price for food than what we were 4 years ago. And boy, if we can extend the life of these foods that we lose so much of, I think there's a huge commercial opportunity to not just in individual packaging, but integration into refrigerators and storage systems where you can just reuse filters and recycle filters. I think is a huge opportunity. Take us away. What do you think?
Yeah, so It's Fresh is an ethylene scavenger, as you correctly point out. It's designed to extend the shelf life of fresh fruits such as strawberries, shown in the picture here. It uses palladium as well. So it's a really interesting technology. It's had great traction in the past with Walmart, for example. Nice, interesting company. Fairbricks is a alternative for carbon neutral molecules for the fashion industry. So our investment partner there is the H&M brand. So precursors for polyesters. You also showed Hydrogen Memtech. That's a gas separation technology company. Importantly, you mentioned, Matt, the palladium situation, if you will, when you look long term, potentially. This is another large, heavy user of palladium for gas separation purposes, based in Norway. And then AirHive is a direct air carbon capture company, spun out of another university in the UK that has made good progress with their technology. The goal there is to bring the cost of capture down to below $100 per ton. And they seem to have a great trajectory towards that target figure. So very pleased with how they're making progress, but also some of their early offtake customers for that, which include a well-known global brand involved in carbonated drinks. So an interesting source of carbon that's going into your carbonated drinks.
Well, Andrew, I think we can go all day, and I'm probably driving the people at Kitco nuts with doing these long format interviews, but I think that was an outstanding overview, and I just can't thank you enough, Andrew. Any other closing comments you'd like to bring to the listeners?
Well, I really thank you for your interest, Matt, and for raising awareness of the sector. We've been the largest now independent venture capital fund focused on this value chain for a number of years, and we're very pleased with how the organization has developed. We've now set up our office in California, so we're in San Francisco, as well as our historical offices here in London and Johannesburg. If you are in the region or when I'm over in California, I'd love to catch up with you.
Oh, absolutely.
And when I'm there. So thank you very much for the opportunity to chat with you and your viewers today.
You bet. So, fantastic episode. Next week, we're going to talk about PGM recycle and some recycle technologies with PH7. So we're going to have the founder, Mohammed, CEO and founder of PH7. We're going to have an interesting discussion next week. Join us then. Again, this is Matt Watson. See you next time. Thank you, everybody.
Green Rush, Mining the Energy Revolution with Matt Watson.